Hi everyone, this is Meherban Faroogh and the begins from the 1000 Pip Club. We're about to get started, so I'll be waiting for Charles to submit his trade plan on forexstreet.net. I believe he said Aussie, I think he's submitting gold price plan, so we'll take a look at that. In the meanwhile, I guess we can look at a couple of pairs and whatnot. So before the class started, I was kind of going over a comment from Goldie on the chat, and she was at, I'm not sure if you saw he or she, so I'll just call you Gold. So Gold was asking if what these lines are. These lines are support resistance and fib lines. And just very quickly, I'll just create a market snapshot. So for instance, let's say if I opened up, as an example, a euro chart. If I opened up a euro chart, right? The first thing that opens up, this is FXCM, by the way. Now there are all kinds of platforms out there, and a lot of them are pretty good. FXCM is one of them as well. We suggest, for the purpose of the class, we would suggest you download the FXCM platform, so we're all on the same page. Right. The other thing I have to mention, any trade plans submitted by students in class, or any price points given out by me or Demi in class, please, you can only trade that for demo purposes. If you're trading it for live, it's at your own risk, because this class is about something basic to intermediate stuff that we cover. So there's a lot of stuff behind the scenes that we would check, and that's taught in the KPC Pro 1000 Pip Club class that we do. It's not fair if we share everything in the free class. So I just want to caution you that if you see a price point that we talk about and you jump in and take it, then you're at risk if you don't know what you're doing. So I have to say that up front. So Gold, what we would do is, so if you open up a price chart, if you see it's not aligned, one of the first things I would do here is auto scale the chart so I can see the entire thing. Personally, I don't like seeing the grid lines. It's a personal preference. So what I do is I turn the grid off, and so support resistance line. So I would typically start, and it takes me, at my stage, it takes me about 20 minutes now, 15-20 minutes. If I open up a brand new chart and to create something like this. You see my euro chart? All the way from monthly. And I've done this for all the 28 pairs, by the way. Now, I know some of you may be rolling your eyes right now. What the heck, and how can you read the charts? But trust me, as you get good with this stuff, I can read the charts. But here's the beauty. By having these lines, support resistance lines and fib lines, laid out very well, the beauty is when I get up in the morning, pre-Dow session or a trading deviation session, whatnot, and I see an opportunity, I'm not fumbling, I'm not scared in the sense, I'm not fumbling trying to figure out where's the next support resistance level or where's the fib level, because it's all laid out. And as you know, the idea is as your support resistance lines and as your fib lines tie together, those give you some superb opportunities, again, trading in direction trend and looking for retracements and all that stuff we talked about. So I'm not exactly sure what's your experience level, Gold, but if you're experienced enough and you understand what I'm talking about, if you're new, or some of the people who joined today, and I do understand that we do have regulars and then we have some new people who join in. So if you're attending for the first time, then we can always go through some of the stuff again. But a lot of this is already on the fxstreet.com site. If you go into webinars, check my name out, Meherban Faroogh. All these classes are there. So they may just put that link there where we should post your trade plans. Okay. So just very quickly, if you want to draw support resistance lines, that's it. You just click a line. That's all you do. So if this is the top you're looking at, all you want to do is make sure the price point is accurate. So you kind of click once. Your high is 49,389. This one is 27, so you can double click, go here, go on the rate, and 389. That's all you do. So it comes back to the. And for the fibs, you can draw a fib. Click on the fib here. Boom. Draw your fib. You can come out, check your price point. I believe this one is the highest, 36. Down here it's 75. Double click it back. Go on the trend line. 36. 75. Now I like if it's a fib that's going down from high to low, I like it red, and if it's going from low to high, going up, I like it green, because visually then when I go to the hourly chart or a lower time frame to figure out, in the back of my mind, I understand if it's red, I'm coming down, and if it's green, going up. So on the levels, I go back and change the colors, and you can thicken depending on how big the price. So if it's a monthly time frame like this, I would make it the highest level to emphasize. I go down to a lower time frame. So I'll show that to you. So that's just an example of support, resistance, and fib. When you come down to a chart like this, it's all over the place. Right? So all my fibs are drawn out. The beauty is, so once again, if I go down to an hourly chart like this, another current time frame. So for instance, if I was about to trade in the morning today, here's the example. I'm not fumbling trying to figure out where my support, resistance, or fibs are. Right there, 31.44. Now since I'm falling, of course, it's very close. We understand where it's coming from. But 31.44 was drawn out many days back, weeks back, in fact. If I go on a daily chart, and right there is, if you check this out, 31.44 is right there. There's my strong support, now turned resistance. That low right there is 31.44, right? Likewise, so for instance, when Charles submitted his trade plan on the board, whatnot, and he was looking at 32. 31.44 is this is the level I was looking at. 31.44. Right there, 31.98 is the other level I was looking at, and 32. And the reason it's kind of maxed out at 32.32, in my opinion, is because of this 38.2% fib. So overall, if you look at the euro chart, it's kind of retracing the downside, and I don't need to repeat what's going on, but a lot of it has to do with what's happening on the Greek debt negotiation. Every day or every other week you'll hear the PSI team or the IFF team refer to that. Oh, end of Jan, the deal is done, or latest by February 3rd. Now I think that's what they're saying. The deadline though is February 13th, and so that stuff keeps going on. And I think yesterday or day before, earlier this week, a new angle came out, which is basically they now want ECB to also contribute to taking the hit. So essentially, so far, the private sector investors, and I think the total debt is what? I think the total Greece debt, I think, is 350 billion euros, if I'm not mistaken. The haircut that the private investors have been asked to take, about 70%, initially was 50, now it's 70, and they're looking at a 3.5% rate over 30 years of the life of the bond, in order to meet a 120% debt to GDP by 2020, year 2020. So all the negotiations going on, and in the meanwhile, they're saying, hey, by the way, why isn't the public sector, or essentially the ECB, taking some hits, right? Why is this us? So now they're eyeing towards the ECB, because ECB a few months back bought Greek debt, I think of 50 billion euros face value, that is valued currently at 38 billion. So it's already sitting on a gain of 12 billion. So the private investors are saying, hey, I mean, if we're willing to take a 70% cut, why can't you take a 12 billion cut at least, with what you're currently showing as unrealized gains, already profit on your books, right? So to compensate. Now, easier said than done, because I guess it's somewhere in ECB's mandate or wherever it is, or they're taking a tough stand, and they've been doing this for the last few months, that they will not contribute directly to taking the hit on Greek bonds. So as far as I know, as of right now, ECB is not budging. At the same time, you will hear the Greece finance minister come out and make statements. So we're very positive it will go through, and I really hope it does. The same with Merkel, all kinds of statements, but let's see. I mean, we've been hearing these statements for the last 6 months, back and forth. So it's not done till it's done. That's the way it is right now. the other thing I want to highlight on that issue, I mean, there was lots of things going on. So I didn't, as I said, I didn't make my notes for today because I was hoping we'll get some trade plans, and Charles is in the process of submitting one. So when he does, we'll go through it. So the question here from 4718, which is the high on the euro at some point in time, is Meherban, do you do a long-term trade plan for any one pair, possibly on a high time frame, days, weeks, months, and then drill down to a shorter time frame trade plan which can change frequently? So what I do is I'm looking to get into positional trades. 4718. And the idea is if I pick up any pair, I would definitely start from the higher time frame. I would never start from an hourly chart. Now let me answer your question properly. So if I'm looking at the euro, right, as an example, or an Aussie or a Kiwi or a pound or a Swiss or a yen or a CAD, and all of these are majors. I look at them on a daily basis. So euro, for instance, is deeply resonated in my mind, which is why when I saw your 4718, I could immediately figure out that was the euro high. That being said, I don't recall all the price points, of course. It's not possible. The point I'm trying to make here is, if you're new to trading A or B, at whatever level you are, if I've not looked at a certain pair, I don't know, just Aussie Swiss, I'll just pick that up, right, for a long time, or if I've not done my charts on Aussie pair at all, I would definitely start from a higher time frame, monthly. I'd go down to a weekly, I'll go down to a daily. And when I say go down, let me just pull it out. So let me pull out a pair, for instance, create a market chart. I'll just pick up from these 28. Okay, I don't look at USD SEK, for instance. SEK, I believe, is a Swiss krona. So I don't look at krona. So let me just pick up USD Swiss krona. Okay, I have no clue, absolutely zero, what this pair is or at. Okay. Now the problem in these ones is if I don't have a proper, see, that's a challenge. It doesn't go beyond 2006, so I cannot really analyze it properly. That being said, this is some of these. Yeah, I got that. Thanks, Mark. Charles has put up the plan, so we'll go there in a second. But just to wind up on this, I would not bother with a trade plan like this because I cannot analyze it really very well. Let me see if I can pick up something else quickly just to. So let's say Charles, if I picked up, I'm sorry, I used the wrong name here, but Kiwi Swiss. Yeah, that's also a few months. That's fine. Let me pick up a major. I'll pick up Aussie, for instance, right? So if I was looking at Aussie for the first time, I would start from monthly. I would do my fibs from down here to up there, from down here to up there, from down here to up there. So these are three fibs going long I would look at on a monthly. I would definitely identify this high as a 98.49, the low there, high there. This is converging here, so I would pick that up. This low here is support, that high. Now these, when I go down on a weekly or monthly, I definitely know, weekly or daily, these two lows here will be significant support, so I'll pick that up here as well. This spike down that came in the recent time frame is definitely a decent level to pick up on a daily. And that's the other thing, as you start doing these multiple time frames regularly, you can look at a higher time frame, and you can quickly figure out what the lower time frame would be looking like. But starting from that's what I would do, going from monthly, and then if I do my thing right on the monthly, when I go on the weekly, most of my lines would turn up right, except in the recent time frames I may have missed some of them on the monthly, so I would do that on the weekly, go down the daily, so on and so forth. But the idea is, as I do this analysis on any new pair that I'm looking at, I'm immediately beginning to form a view. From a technical perspective, where the pair is headed. Now, if you ask me trend, of course the trend is up, right? So of course going long from a trend perspective would make sense. But that being said, you have to also look at, and this is the weekly chart, right? You have to also look at from a kind of a closer perspective or the daily trend perspective. What is it doing in the current time frame? What is not current time frame? What is it doing more recently, right? So more recently, once again, while there are lower tops and it's about to breach its last lower top, lower lows, over the last few days, it's really been tearing apart, going long. That's when it comes down to understanding the current fundamentals. What the heck is going on currently in the market, right? So is it China's growth indicators that are coming out, or the fact that China is not going to crash? Because Australia's GDP depends a lot. I think it's 40% or something like that, significantly on just China alone, as an example. So if China does well, Aussie does well, right? If gold does well, if metals do well, Aussie does well, so on and so forth. And that being said, if you ask me at this point, I think I would be looking at shorting the pair, quite frankly, Aussie. Just because it's completely overbought, even though this trend, the high side is high. If it gets around here, that's a very decent price point, 752 to consider shorting it. And I'm not, see, this is just based on my looking at the charts blankly. The beauty of having, where's my Aussie? So the beauty of having my lines, coming back to question from Gold on this forum, the beauty of having these lines laid out clearly is, I say, oh my God, okay, from the recent high 719 down to the low 93.86, 76.4% is 680. Look at where it's currently breaching, not breaching, it's resisting. See that? Do you see that? 76.4% is 1.068, 680, right? 680 is precisely where it's having difficulty to break out. Now, if you look at this momentum, it probably will, but it's really finding tough for the last few days to break above 686, 683, and just today. So, trying to take it short at around this level, just above 686, may not be a bad idea. And guys, if you're trading, I suggest try and do it in demo, and see how it goes. Okay, that's kind of my quick one on the policy. Okay, so I understand that Charles has posted a trade plan on the forum, and I would really hope that over the next few days, a few others would also do likewise. Okay, let me put these things a little bit on the side because they keep triggering a lot. Okay. So you have to be a little bit patient with me as I try and load, pick up the trade plan here. And I hope my computer doesn't freeze up, because at times when I download, I've got too many things, especially the hotcom going on, it tends to freeze up. If it freezes up, just so you know, I will log back in again. So just be a little bit patient, please. Okay, so you go into trade plans. For those of you who don't know, that's how you do. Go into groups, 1000 pip club, trade plan, and you can follow along. You can download Charles' plan right there. Charles, thanks a lot. No worries. Okay, you can, if it's not done completely, so you click here, open, and fingers crossed so it doesn't freeze up. Oops, I'm loading from site. I think I got it. Enable editing. Okay. So let's read over Charles' plan. It's a little bit reduced of font, so I need to go a little bit closer to the screen. Okay, so this is the gold one. So Charles is picking up. So I'll first pick up a blank. I think I have also some lines on the gold chart, but I think I'll pick up a clean one, so we can do it together. And this is the XAU USD, XAU USD monthly. By the way, Charles, I have my own opinion on gold. which may or may not be correct, but I'll share that with you, and we'll see how it goes. Let me see where you're coming from first. What's the time? We're 26, so we're about 20 minutes, 30 minutes or so. So gold has been used as a hedge against fiat currencies, absolutely yes. What we also refer to as inflation hedge. Although price has doubled a few times in the last 10 years to the current price around 1725, yes, the uptrend will remain intact as long as uncertainties in the market, such as euro crisis, is not fully resolved. I would completely agree with you. Okay. Time plan is 1 minute. Okay. Plan to trade this pair long. You want to go long on this, okay? Number of lots 3, entry price 1630. So the first thing I would do is I would take a line and I would draw it right there. So we understand where Charles is looking to get in. And so what I'll do is I'll put it I'll put it green. So mentally understand he's looking to go long. If I do red, he's looking to push short. That didn't come out right. If I do it like that, it'll be better. Yeah, probably better. So 1630 is where he's looking to go long. Stop loss is 1610. Okay, 20 points below. First take profit, okay, 1650, 18, 2000. Okay, alright. No worries, risk reward not finished, no worries. We'll go there. Charles, one thing I will tell you, I don't trade gold or silver for like the way I trade forex, okay? But I am considering that for my personal retirement funds. So I'll be talking more from that perspective. But I don't trade regularly gold and silver like I trade the currencies. Just a heads up. But I'll be happy to share my thoughts on the chart and whatnot. So chart trading, gold has made 26% retracement and setting all down. So let's put that. There's a monthly chart, 25. Should be down here. Yep. So right there, one of these is 25. Oh, that's 21. What I'm seeing right now is 253. Yep, right. 25, 251, 95. You got it at 70. That's fine. You're looking at probably a bit and a half difference. And there's 1920.80. You got it at 1920.72. I'll go with your numbers, Charles. So for the benefit of those again who haven't used, okay. So for those of you who haven't used Fibonacci's, I have to emphasize again, please do so. It's very simple. It's not rocket science. All you need to know is what is the low and what is the high. I'll go down here. That's it. Drag it up there. This box opens up, and it's a little different for different platforms you use, but more or less it's the same in terms of how to do it. So the rate is 251.70. Right there is 251.70. High is 1920.72. So I'll go with 120.72. As I said earlier, if it's going long, I like to keep the trend line. So this is the trend line. You see that? It shows you where you started and kind of where it's going. So I like to keep the trend line intact. I change the color to green, so visually I can understand. And since it's a monthly one, so I'll put it like little bold. Make sure my percentages are selected. Now, if you're doing it for the first time, and you don't have like 76.4 in there or 23.6 in there or whatever you want in there, you can simply go click add and add that, and it'll be good. And then set it as default, and you'll be good to go. Okay, so there is that. The 50% is the pivot is looking at 108.6. Okay, all right. I really hope it comes down till there. Okay, support resistance levels, December low at 1522. December low at 1522. December low at 1522. Beautiful, Charles. I like it. I like it because 1522. 1522.52. I'm just using Charles. Oops, I should have put that a little bit bold. Okay, so this I'll try using blue now, and since this is a monthly again, I'll put a little thick. So guys, do you see how beautiful this is? How beautiful it's turning out to be, Charles? 1522 is right there. This candle low is December, so 1522. 1522 is also, now understand, this is a monthly chart. It's not a 1 minute chart, it's not a 5 minute chart, it's not an hourly chart, it's a monthly chart. The low that Charles is picking up, 251, is all the way from 1999, right, to current. 23.6%, which is, if it starts breaking 23, typically, you start saying, okay, let's see where it goes. 38.2 is a kind of a firm retracement. As it starts going below 38.2, you can expect a reversal and so on and so forth. But if it's going with the trend, now when I say with the trend of the monthly chart, if it's going with the trend of a monthly chart, typically if it does 23.6%, you can assume that the trend is still intact. That's a normal retracement that would take place. But 23.6 is on a monthly chart is 526.8. December low is 522. So that's not bad. Okay, let's keep going. November high is 1802, and that's probably this one, 1802 right there. So I'll put that 1802. This since is only trade plan, so I can take all the time to draw the lines up. But if we start getting 2 or 3 trade plans, I'll be very quick, just so you know. So if I don't take so much time at that point, you should know why. I'll put that in a little lighter font. Okay, so that's the range he's looking at so far from what I can see. Okay, the average monthly pips range is 156 based on 14 ATR. Okay, I guess. Weekly chart. Let's go on the weekly chart. Now, the beauty here is as soon as I open up, see I've drawn the lines. As soon as I go on the weekly, of course, lines will stay, and you start seeing this range a lot better. Isn't that beautiful? See, you saw this on a monthly chart, and for those of you who don't understand multiple time frames, that's all this is. It's the best way I can explain this. It's a magnifying glass. You're just taking the magnifying glass closer to the small fonts in a book in front of you. So as you step back, you almost can't read the font, but you can see some kind of a design. But if you take a magnifying glass and start going closer, you can start reading the fonts clearly. So when it comes to charts, when you're on a monthly chart like this, right? When you're on a monthly chart like this, you can see the overall trend. Unless you're an experienced chart reader, you can quickly figure out what this would look on a daily or a monthly chart or a weekly chart. I'm sorry. But if you're not experienced, and you don't really need to be, you need to know how to use your tools properly. That's the key, and you keep becoming experienced. As you open up your weekly and your daily, this will start becoming a lot clearer. Let me pause and again explain this. At this point in time where I am, right, there are a couple of things you need to know, and I don't care if this is gold or this is silver or whatever this chart is, right? All you need to know is on a monthly what it's doing. So beautiful, it's a superb bullish trend. Okay, great. In February 1st, 2012, do I really need to know what happened down here in 2008? Initially. Later I'll explain to you, you need to actually, but at this point, and so I need to go down on a daily chart or an hourly chart in 2008 and figure out, no, the answer is no. Down here, no. Down here, no. So when it comes to multiple time frames, I need to know what's happening in the current time frame. So you start condensing the time shorter from monthly, so you go on the weekly, daily, hourly. So what it really starts boiling down is what's happening in the current time frame. And again, the word current time frame is perspective. I could have probably said this better. So it's perspective. So from the perspective of a monthly time frame, I'm looking at monthly, my next immediate perspective of current time frame is weekly. Think about this. And this is being recorded, so you can always go back and check out. So my next immediate perspective of current time frame from a monthly perspective is weekly. So I'm trying to figure out, okay, so what's happening on a weekly? Now I can see on a weekly, it almost double bottomed. I can see my 23.6% fib and that support lining up very nicely. I can see lower tops, 920, 1920, 1802, and just presently where it is, 1751. One of the things I would probably do, and I hope Charles has done that, is I would pick up this fib right here. Right there, I would pick up a fib and see what the heck is happening. Okay, and I'll continue reading Charles' plan and see what he's doing. Okay, so Charles said he looked at 1920 down to 861. Okay, so let's see why he picked up 861. 861. Oh, okay. Sure. 861 would be down here. That's my 861. It's not coming up properly. Right there is my 861. This candle low. Okay, Charles, that makes sense. That still makes sense. So you're looking at a bullish one. So I'll go with your numbers. 861 up there. 861. 40 to 920. So Charles, how long have you been trading? Just curious. 1920.72. And I would put this in green. And over a few years. Okay. And again, I'll put this in green. Now, you see what I'm doing? So once again, green means the fib I'm looking at is going long. The thickness of the line, again, this is just my way of understanding. The thicker the line, the thicker the fib line is, the stronger the fib is. Same goes with support resistance. The thicker the support resistance line is, the stronger the number. And as a stronger, meaning it's coming from a higher time frame. When you pick up fibs and support resistance numbers from a higher time frame, like a monthly, that's far more significant than an hourly. Okay? Or even a daily at times. Yes, let me continue with Charles' plan. Okay, so he's looked at that one, 1301, sure, right? That's tying up. Let's keep going. Support resistance levels 1531.8. 1531.8 would be December low. $15.31, yeah, right there. Is that December low? September low. Okay, September low. Right there, that candle. 1532, and I would stick with just this low. That's fine. 1532. You got that? Okay, keep moving on. So Charles, the other thing I would pick up, and you probably picked it up on a daily chart. Let's take a look at when I say that. Okay, so the next, and you didn't get the time to complete, Charles, but I really appreciate you submitting the plan though. So you can pick this up from the daily, or you can, weekly, or you can pick it up from the daily. So the one thing I would pick up instantly would be this low there, 1522 and the high. So I would complete that fib. 1920, what is that, 72. And 15, what's the low here? 1525.10. 1525, it's already there. Bear with me. And I would turn that one to red, and I would keep this one to a little thicker. Okay, so now I start seeing that the downside fib is this one. Okay, so the other one I would also draw is from this high. See, it came down, went up, that's the next high. 1802, so I'll also draw one from 1802, and I'm still on the weekly. I'm not even going down to the daily. But these will be very strong ones of the daily. 1802. And since I already drawn my support resistance levels, I can pick it up from there very quickly. 52. This, by the way, is a good exercise for those of you who still want to learn how to do support resistance and this. And where's my low? 526. 525. I could really love 525.10. 525.10. And I should turn this to a little red, and I should maybe choose a second bigger line. Excuse me. Okay, let me just go down to a daily now. So Charles, I think as far as your plan is concerned, I really appreciate you putting the snapshots also, but not required, but if you want to, feel free. Let me go down on the daily chart. So gold as a question, how do you know exactly where to start the fib from? Dimik, can you respond to that question on the side? But if I look at this chart, and this could be a 1 minute chart, gold. It could be 1 minute, it could be a monthly chart. If I'm looking at a chart like this, the first instance I have is look at this high, and this is the highest and the lowest point. The highest and lowest point, the high to low, right there, and then I'll go from here, this low to this high, and then figure out. And essentially, you understand why do you need to look at fibs. Fibs essentially tell you the retracement levels. And I don't want to go into in details of who Fibonacci is, and Fibonacci's are into flowers, and Fibonacci's into the planet. And so there's a whole science on Fibonacci's, but all you need to know is that it works. Big time traders use it. It doesn't, nothing is guaranteed, just like support resistance, it will be breached. Similarly, fibs will be breached, at some point or the other. But that being said, if the pair is maxed out in a certain direction, going against a trend, if you have certain retracements lined up together along with support resistance, it's good stuff. So where was I with this? So let me go back here on your plan. So overall, Charles, you're looking at taking this pair long, right? If I got this right, you're looking at taking this pair long at 1630. Your basis for 1630, just based on your analysis at this point, is 23.6%. Okay, so let's go on the monthly again. Your basis is 23.6. Hang on, did I get this right? Yeah. Your basis is based on, as I get this, is 23.6% of this fib from 681.4. Sure. And that fib alone, I think. If I go down on a daily chart, what else do I see? What else do I see to confirm that taking it long at 1630 would make sense? Unless I'm missing something, not much. Overall, Charles, if you want my opinion, and this kind of goes to on a fundamental side also a little bit, I would think that the gold would fall, actually, in the near to mid term. And again, guys, you do not trade based on information just get out and plans. You have to do your own analysis for live trades, which is why I said I'm looking to take it for my retirement fund. I think gold and silver would fall, and I'll tell you why. In my opinion. Okay, so would I be comfortable taking it long at 1630? Personally, I wouldn't feel so, but based on just your plan, and other reasons also, I don't trade gold regularly in my forex account, if I told you so. I think it's too overbought right now, gold. I think there is if you look at just a daily chart or weekly, whatever, I think a kind of a retracement is in play. You see lower tops, right? So yeah, you can probably get in at this point and try and make a few points or pips. But I think overall, gold has a potential to drop. If you've been following, George Soros or some of these other people who know a lot more than, I guess, all of us combined, he sold off gold. I don't know if it's at L's peak or at the 1800 levels, whatnot, last year. He did buyback later in Q1, but he's kind of almost down to zero in his George Soros fund and whatnot. The other thing I will tell you, so with that, let me just go and quickly analyze. I have, hopefully I have 10 minutes to do this, so I'll do this right. And I've got too many lines here, so let me pull up a chart. To in fact close some of these plans. I'll just quickly start closing some of these plans so they don't. I need to line up a few charts and show you why I'm saying what I'm saying. Margin call. Okay, so if you believe in the fact that Europe is going through its crisis, and if you believe that they will not probably come up with a decent solution, and I'm not talking short term, I'm talking long term. In the short term, sure, I think by February 15, I wouldn't be surprised if the deal is signed, but guess what? The next shoe that's going to fall. Portugal. You're already seeing signs of people questioning, hey, what about Portugal? Then the next shoe is Ireland. Italy has done well in the last week or two with Spain in its bond issues. That being said, Fitch also recently has downgraded Italy. I believe that Italy, Spain, some of the others, right? 5 of them did it. Italy has a huge, I've covered all that stuff before. They have a huge debt, 1.9 trillion. They had to raise like 53 billion by end of this year, 53 by March, so on and so forth. So the next shoe that will drop most likely, if Greece gets through, the next shoe that will fall is Portugal, and along with that, Ireland will come into play. Along with that, so things are bad. Now that is a sovereign debt crisis in a nutshell for you. If you look at, if I pull up, create some quick market charts. Let me close everything so it doesn't come at all in the way, and I don't have too much time to do this right. But I'll even remove the goal plan, right? So just open up a few charts for you. And I want to show you what happened, I think it was 2008, when the market crashed, when the stock market crashed. When the stock market crashes, not everybody exits. People hold on to their shares, and around that same time, new buyers come in, because they look at valuations and they think at those valuations, there are some great buys, and it's all based on one view versus the other, right? As a result, when you keep holding on to your stock, margin calls take place, right? When margin calls take place, people, funds, macro funds, minor funds, retail investors, wholesalers, whatever, they start looking at what can they sell to hold on to that stock. Among other things, what people sell is their gold investments, gold and silver investments. So what the point I'm trying to come at is when people, when equities crash and massive margin calls happen, you would see a sharp spike on the gold. My opinion, and I may be wrong here again. I just caveat this. So what I want to point out is, for instance, so this what you picked up. Let me draw a line quickly here. So this may not be exact, but just to quickly show you this area. Now this is silver, by the way. It dropped from 21. It's 36 actually, not 28. 21.36. Yeah. 20. So this is the level I'm eyeing at, to be honest with you, to start buying silver. I think, by the way, buying silver would make more sense than gold, just so you know, because silver is far more volatile and silver has much more industrial use versus gold. There are some projections of silver hitting 200, by the way, 240. But that won't happen soon. That's like a 3-4 year out, 5 years out. But if you can get silver, as much silver as you can get, in my opinion, in this range, if and when it comes down here, it will be worthwhile. Now, gold. So this area is, you can see my dates below. It's April 2008 to November, and I'm so glad that CM has improved, have put their charts back the way we were used to, so we can see the months properly. So look at those dates, right? April to November 2008. If I go back on gold, my friend, the same thing happened here. The high was 1302, and I don't need to be precise, but 1302, and somewhere down here, right? 685. This is the 681 that you came up with, right, Charles? 681. If I draw a line here, once again, you'll notice, oops, that's not the right one. This is April. See this? You see this? This is April to November 2008. So April to November 2008 is really when gold and silver shorted. If I go on equities now, if I have this right, do I have this right? Yes, I thought that was around the same time frame. Oh, sorry. Yep. So let me go back. Sorry, I'm getting a little confused. April to November. Let me go and just draw my lines. April 2008 to November. That's what I want you to see. When the subprime crisis happened, and this really took off, and this is the key, guys, so I want you to focus here. When the subprime crisis happened, it really started tanking 2008. Okay, so even though we have blue candle, but it topped out at 13,137 and started tanking. I personally think that the sovereign debt crisis that we are under right now, and it goes all the way to US as well, by the way, even Japan and a lot of other countries than just, but I think the Eurozone will be the catalyst. When the subprime happens, I think there'll be a sharp drop. God knows how far it'll go, but there'll be a sharp drop. I think what will happen is just like what happened in 2008. The first few months, people keep holding on to their stocks. A lot of margin call takes place. When a margin calls take place, people start selling a lot of their other crown jewels just to hang on to their. Some of that crown jewel is gold and silver. So just look at this time period, what happened when equities dropped, and look at what happened to gold and silver. So I think that will, the first few months of when the crash happens, I think at that point gold and silver will drop, and nobody knows the bottom. But after that crash, I think what you call the equities can still keep going down, but after a few months, 3 to 4 max, I think definitely gold and silver will go back up. So I'm not keen on buying at 1610 levels from a positional point of view or for my retirement funds. I'm looking for this to further drop. I would not be surprised if it comes down to 1300 levels, which was I think the 50% on your plan around there. Some buying around here, but I'm looking if it can come back to this range. This is the range I'm looking to buy gold at, and this is the range where I'm looking to buy silver at. And call me crazy, but that's what I'm looking at. That's it, guys. I hope that helped. And you can look the same thing on the euro, by the way, same period. If you look at the euro around the same period, which was April 2008. Right there, down to November 2008. Isn't that look at that. So this is what I keep saying. The euro dropped, Dow dropped significantly, gold dropped, silver dropped. I think there's a lot of it has to do with margin calls. Personally, I think your small deals will be made over the next week or two, and maybe even ECB will give up their 12 billion of unrealized gains on the Greek bonds that they bought, and that might, again cause a little bit of a rally in the euro. But overall, I think euro is heading for a shortfall, for a downfall. I think overall it's looking to hit 1875 or below. The challenge always is at what price do you get in. So I'm not looking to go long on the euro. I'm looking to go short on the euro at every potential opportunity. Okay. That's it, guys. So let's see what comments we have. So I'm sure Demain has responded to most of them. If not, I can take a quick look. I have another 7 minutes. So let's see. Some of the fans, chart is okay. What are those lines? I think I can explain lines a little bit more later, whenever. Then post your thoughts on. Guys, start using the forum a little bit better. This is again forexstreet.net. Post your thoughts and feel free to critique, by the way, if you agree, disagree, what you like. I mean, we all learn together, right? Generally, some lines, okay, blah, blah, blah. One day you go probably exactly where to start the fifth from, so I explained that. But if you need more clarification, go let me know. I would strongly recommend go back and check the archives. Complicated question. We're looking for, okay. It would be nice if you can do a lesson for Fib. Okay, if you want that, I can look into it next week. Too many Fibs is just like Elliott Wave. No, Elliott Wave looks into Fibs too, and I don't. I'm not an expert in Elliott Wave, and I don't use Elliott Wave purely because the challenge here is if you ask me, will euro drop? I'll tell you yes, it will fall. The question is at what price do you get in? At what price do you get in? So if Elliott Wave can tell you a precise price point to get in, then. But again, I'm not an expert. If that works, you can feel free to use it. It's called the basics. Okay, thanks for sharing. All right, guys. I think we've got them all. We're 4 minutes to 8 a.m. here Eastern time. It's wonderful to have you guys. We really enjoy doing this. I hope you guys enjoy it equally. So we'll see you next week. Take care. Thanks, Charles, again for your plan and